Okay, we're good to go. So welcome, everyone, to Tivan's introduction to the Speewah Fluorite Project. We're really happy today to be introducing this to shareholders. There are three principal reasons to hold a call. The first is that we see this as a compelling and complementary opportunity for the company, a true game changer. I think the most important announcement and the most constructive announcement that we've made over the past year. So we're really excited to share that. And I wanted you to hear from me directly on that. The second is that we appreciate that there's a period ahead where we have to educate both shareholders, future shareholders, and probably the country at large as to fluorite. It's obscure for people in Australia, even though the market is actually quite large, highly developed. We can see from the announcement past couple of days, people are not familiar with it. And that's not a huge surprise, but it does put an onus back on Tivan now to make the case and to bring people up the knowledge curve on this very, very important critical mineral. The third is that we've always embraced open, transparent communications at Tivan, and especially timely communications. So I just wanted to jump online and provide that opportunity for shareholders to hear directly from me, and also for Q&A. Obviously, we've opened that up in the past 24 hours. And even now, if you want to post questions through live on the email, I'll pick those up at the end of the call. So I expect this will just run for an hour. We'll endeavor to get through the slides in, say, 30, 40 minutes, enable 20 minutes for Q&A. And that's really all the housekeeping there is, so we can sort of jump straight in. We will post a replay. As I said, for those who are on right at the top, we'll clean up the vision and the audio, and we hope to have that with the ASX tomorrow morning, because I'm sure a lot of people will want to watch this down the track. Okay, so without further ado, just going to run through the slides that we prepared and that we sent out to the ASX 1 to 2 hours ago. All right, so here's the rationale. We've got 8 dot points there, and putting this together, we see a compelling and complementary opportunity in terms of the Speewah Fluorite Project. The first point is the point we've emphasized publicly, and this was the major catalyst in the past month or two for us to really escalate our efforts here and make the announcement that we made on Tuesday. Fluorine was included on the critical mineral list in Australia on December the 16th. That's a very important development. And as I said, it catalyzed us into action over the break and right through January as well. I'll come to what that means substantively deeper into the presentation, but no doubt that that was a very large feature in the board's thinking in making the announcement on Tuesday. The second is that at Speewah, we negotiated back in February of last year to include the fluorite resource. We knew its importance, and we recognise that it's the sole high-grade JORC-defined resource in Australia for fluorite. Now, there is another resource down in Tasmania. It's very different. It's low grade. It's stuck in magnetite. What we see at Speewah is a resource which is highly amenable to a simple flow sheet. Obviously, we're in the north of the country as well. It looks through all our diligence in the past 1 to 2 months and the deep dives that we've done in the data room and all the previous work that's been done on the resource, which dates back in some cases over 2-3 decades, to be ready. And here we are making this announcement. We're really excited about that. And it is, I would say, it's a unique opportunity we have in Australia. The third and the fourth dot points go to the importance of FluSpar, particularly in terms of next generation EV batteries. Now, this use case has emerged on the scene in the past couple of years. There's been a lot of advances in battery technology for electric vehicles. FluSpar and Fluorine was used and still is used in many industrial sectors. There are traditional use cases which are compounding in their growth, more or less equivalent with global GDP. And that's been the way for a very long time. And in fact, Fluorine, some people will know, also has a difficult history because it was involved in hydrofluorocarbons, and that was associated with the hole in the ozone layer. Now, there are international protocols around the phasing out of that use. Australia is part of that, and we're obviously happy to see it have evolved from there. And what we're seeing now, and I'll come to some really deep dive analytics on that in a minute, is an explosive use case, which is projected out pretty much from now all the way out through traditional forecast horizons to 2030, 35, where fluorine has a fundamentally important role to play in the next generation of electric vehicle batteries. It's baked in. It's very hard to substitute away from. It's to do with the electronegativity properties of fluorine. Fluorine is the most electronegative element on the periodic table. It can be measured on the Pauling scale. And it's this property which has emerged in this next generation use case and underpins an explosive growth profile. And importantly, in terms of the geopolitics of the situation, Fluorine is shaping up very differently in terms of how China is placed as a swing producer. China is set to deplete its reserves very quickly in this, and that's a sharp contrast to rare earths. That's a sharp contrast to lithium, and we'll come to that in the slides below. But what it does mean is that there's an underlying supply-demand trajectory, which looks very, very constructive for acid-grade fluorspar prices. And that in turn is reflected in current pricing being very, very high, notwithstanding the collapse in many other critical minerals pricing. Now that's fundamentally important for project economics and for project finance. And so timing on this is important. And with the catalytic event that we had from the critical minerals change, we see a very, very optimistic picture in the next couple of years and beyond to build this project. I want to emphasize here as well, and this will be a recurrent theme through the presentation, that this project is simple, it's very low in terms of capital intensity, and it's fast. This is a very orthodox flow sheet that we'll present. It involves digging up the resource, it involves crushing the rocks involved, grinding down, and then flotation and shipping it out. We've looked at some other variations on the theme already, but this is the central path, and it stands out in terms of the project economics to run down this conventional sheet. It's very, very simple, certainly much simpler than many of the other initiatives that we've looked at and that we're involved in vanadium as well. And so I want to emphasize the clear demarcation between these two projects, which also goes to timeframes, which I'll come to as well. Now, this is very important for Tivan at this juncture. This project's within reach. It's highly attainable, it's highly achievable, and it will mean ultimately that we have a path to revenue, profits, and also that we're able to then kick on and build the vanadium project, ideally through profits and through retained earnings, thereby bootstrapping the firm and avoiding future dilution for shareholders. So this is a smaller project which is certainly within reach of the company, and we're able now to open it up to shareholders, into the market, and to facilitation and to government, and that's why we're here today to introduce it. I've mentioned already the vanadium project, and one of the concerns I think we held in going public with this, and perhaps we saw a little bit of this, is confusing that narrative. We've spent the better part of a year explaining to shareholders how important and how special the Speewah vanadium project is. And I want to emphasize very clearly that that remains our view. This is complementary. This is a bootloading project for us. It will enable us to build critical infrastructure into the Speewah Valley, which will most likely accelerate the development of the vanadium project. And I want to emphasize here as well, our relationships with traditional owners. We've worked really closely with TOs up in the East Kimberley for the past year. Shareholders would have seen a very important agreement that we announced with Kimberley Land Council in December in terms of heritage protection. The traditional owners, and we've briefed them extensively on this, are happy, very happy to hear a smaller project is a likely starting point. And you can imagine, again, crawl, walk, run. Or perhaps imagine this was your backyard and someone was moving in with these sorts of intentions. I think you'd be sympathetic as well to hear and supportive to hear that the starting point for the company may well be a less ambitious, simpler, much smaller project with much less impact as well. So that's an important point to emphasize. Those synergies are readily apparent. It's miraculous that these two resources are effectively side by side at Speewah. Now, I've mentioned the traditional owner portfolio already. Importantly, Tivan last year spent a lot of money and a lot of time on advancing what we saw as the longest lead item, which is environmental approvals. We completed our dry season survey through Q3 and Q4, and we're on track with permission to complete the wet season survey in April. Now, those are critically important items which apply directly to the Speewah Fluorite Project as well. So in many ways, we're already 9 months into this journey, and that expedites the back end of the project delivery timeline for the Speewah Fluorite Project. And finally, this point, I'm going to hammer this point home this afternoon. the situation that we have with Tivan is that we have an opportunity now to build a very fast and profitable project, which can get the company to revenue much sooner than the board had been discussing with shareholders all the way through last year. And the opportunity we have to deliver to shareholders a project, not just commissioned, but delivered and operational and shipments out of the port of Wyndham, that will be absolutely transformative for this company. And I believe strongly that if we do achieve that in the next couple of years, that will provide a much superior outcome for shareholders in terms of retaining their percentage share ownership of the company as the Speewah Vanadium project takes shape. So all those rationales together lead to this strong conclusion that this is a compelling and complementary opportunity. Now, I know it caused some surprise. There's a shock of the new. There's a very low knowledge base on fluorite, and we have to work through now over a period of time, months and years, to bring people up that knowledge curve. But make no mistake, this is a transformative opportunity for the company, and we're absolutely embracing it. As we make this case for fluoride, please don't think that we're deviating on vanadium or that we're any less excited about vanadium at Speewah. We see this as an enabling project for the larger project to take shape. It's a stepping stone, and it's a miracle that it exists, and we'll be advocating for it strongly in order to bring people up that knowledge curve as we forge ahead. Okay, so into the presentational slides. This is the long history of Speewah. In fact, the long history dates way back. If you do want to know, the gold rush started around the East Kimberley, Western Australia, around late 1880s. Fluoride was discovered at Speewah in 1905, and that's what it was known for. Fluoride's never really been mined in Australia. There's been a couple of small-scale operations in places like South Australia, New South Wales, dates back 60, 70 years, but nothing like this. And the resource that we've got in terms of the grade, the size, is absolutely special. Vanadium came along and was discovered, mapped out, drilled about 15 years ago. And you can see the history there from the previous owners, KRR, and they worked their way through the vanadium resource over a period of 4 or 5 years. They took a good look at fluoride in 2018. And we're pleased to say that particularly over the past month, we've pulled apart not just the scoping study that was delivered in 2018, which is not publicly available. KRR released to the market just a summary of those findings, where, of course, we've got the full report, all of the appendices, and most importantly, the data room. The data room has thousands and thousands of files, particularly on the geology of the fluorite resource. So we have all this information, and we've worked our way through that as a team assiduously over the past month or so. And the results of the scoping study are clearly constructive, and it gives us that first step on the ladder towards project development. We're building on this, which is why we're able to say that we can deliver a PFS on the fluorite in such rapid time. There's a whole infrastructure that's been built around it in terms of data, resources, financials, and that accelerates our ability to deliver the next stage gate, the PFS, as well as the fact that it is just, and again, I emphasize this once again, it's just a much simpler project, much simpler, much smaller in scale, much lower in impacts. And so able to expedite this and present to shareholders a much faster path. Now, there were other iterations in terms of Speewah. It is a cornucopia of resources up there. There's gold, there's copper, there's high purity alumina. Our focus is the standalone fluorite resource and then the big vanadium, titanium, magnetite resource. These are the two where we're very confident there are commercially feasible projects to be defined. We believe the VTM resource is the best resource on the planet by some distance. That will be shown in our PFS on vanadium. We're on track to deliver that. We're working as fast as ever on that in conjunction with Hatch and a whole array of contractors. It's on time. We have not deviated one moment from that, and we're planning to deliver that on time, on schedule in September. The fluorite, because we've got the scoping study already, and it's a much simpler project. We believe we can deliver that in June, so the end of Q2. So that's the progression of how the resource has been explored. Attempts have been made to commercialize it over the years. The logical starting point, as we see it, is fluorite, building on all the work that was previously done and the opportunity that's been created in the market, and with the facilitation received, because fluorite now is a critical mineral in Australia. And this is a very simple slide to capture that point. The only extra emphasis I want to add here is that Australia was catching up to the rest of the world on this, in that fluorine is already recognized as a critical mineral because it's playing such an instrumental part in many value chains in Europe, in the US, in Japan. And happily, all of the networks that we've built up over the past year in offtake negotiations and all of the commercial partners and potential partners that we've met in places like Japan, in Korea, India as well, we've engaged with them already on fluorite, and the response is fascinating. I think there's just a huge disparity between the knowledge base of how important fluorite is in Australia versus the rest of the world. In the rest of the world, they're all about it. It's super hot. Everyone's looking for it. In Australia, the knowledge base is just not there because it hasn't been mined before, and there's very little supporting infrastructure around it in terms of government and facilitation. And that's what we have to change. And we're completely capable of changing it. So it's that December 16 decision which really resonates. But that was Australia catching up to these other large markets. Here's the resources shown on a map. A few things to highlight here. In white, these large VTM resources combined 5 billion tons of vanadium, titanium, magnetite, largest resource hard rock in the world, highest grade in the world. We are here 100 kilometers south of the port of Wyndham, and the VTM resource is spectacular because it outcrops as well. So it's got all these advantages. We're deep into the PFS already. We know that the revenue line on the vanadium PFS is going to be spectacular because of that high grade. All of the work that we've done with Hatch and facilitation partners, a 48-hour workshop at the back end of last year confirmed all of the work that we'd done as a team last year. The revenue line is shaping up as 1.8 to 2 times better per unit of concentrate than all other competitors in Australia. And so this is a really, really spectacular resource, the vanadium resource. It's vast. It is a sovereign endowment of incredible proportions. And we need to find our path to unlock that resource. And we believe the path is through the fluorite. Now, these are geologically separate resources. From the edge of the vanadium to the edge of the fluorite is 1.6 kilometers. It's really incredible that these two things could be side by side. And of course, that opens up obvious opportunities to phase the development of the Speewah Valley. We're here about 30 kilometers west of the Great Northern Highway. That green dot is the town of Doondoon. We know many people in Doondoon now. We've been doing community works in the town. They're our friends, and we're looking forward to introducing this in person to them when we head back out as early as February. We know already from our ongoing engagement with KLC that the use case of fluorite in the EV battery sector, given that it's now contributing to the energy transition, is really, really important. And again, I just want to emphasize that this idea of starting smaller with lower impacts is obviously going to be very, very well received on country. Another really important point I want to flag for people who are more focused on the technical aspects of project delivery is water. Now, if you have a close look at this map, we've flagged SPB1. That is a test production bore from way back in 2004 with a very high flow rate. Now, it's located inside the fluorite deposit. That means that we have enough water on site to do the production. We don't need pipelines. We don't need bore fields. It's sitting there at the ready for us. That's a very important enabling factor for people to understand about the fluorite project. The vanadium project, because it's bigger, will require larger scale, both power and water. Now, we've got a very creative solution on power, which I won't be able to address today, but we're advancing that in good time. It'll be critically important, and I think it will really change perceptions around this company when it takes shape publicly. For the fluorite, because it is a much smaller project, much lower power requirements, much lower environmental impacts, that can also fast track us through environmental improvements. But the water is key. We have enough water on site, and that is a really, really important development for shareholders to understand in terms of expedited project delivery as well. Next is the resource model. This is made in Leapfrog. It just gives people an optical sense of how the vanadium sits. It sits in veins, which is distinct, from other forms of mineralization. Importantly, we believe that the fluorite resource is significantly underrepresented and underestimated in terms of the JORC classification. We're in a process already working with SRK independently to work through all of these files that are in the data room. It's a hell of a job because there's probably 7, I think, different drill campaigns over the course of 30, 40 years. And so we have to compile all this data to make sure that we're confident with the estimate that's provided. Already, we see opportunities based upon just what's in the data room to increase the resource size and to improve it in terms of cutoff grades as well. And so that's very important to understand. Additionally, there are 4 main veins represented in the 2018 resource model. These are referred to as A, B, C, D. There's also E, F, G, H. Now, these are dramatically underexplored, and our intention will be to do a further drill campaign, again, with the permission that we'll receive under our Heritage Protection Agreement through mid-year. Those results will underpin, most likely, a further resource estimate that we'll be able to provide towards the back end of this year, and that will be the resource estimate that ultimately carries forward into the project. And so what we're saying today is simply, we've got all this data, we're working our way through it. It's a process, but we do see credible upside risks to resource definition, and obviously that will be a mandatory disclosure at the appropriate point in time. Next, now this is key. Now, for long-standing shareholders of TNG, you'll recall these incredible, elaborate flow sheets that used to permeate through TNG marketing presentations. And I won't go too far into it today, but even they were misrepresented and underrepresented in terms of the complexity of Tivan. If we look at this is as simple as it gets in mining. As I said at the top, dig, crush, grind, float, ship. Now, this flow sheet has been tested. There's test works, lots of results available. That was part of the scoping study to confirm that we can achieve the grades. We want to reach the acid grade fluorspar marker, which involves a 90% cutoff, and it involves also avoiding certain specs in things like silica and arsenic. And what we've got from the test results, based on this flow sheet, is achievement of the fluorspar spec, 97%. Now, we want to do our own work on that. We want to move around different samples, the new drill campaign, and so on and so forth. But we're very confident that this very basic, very conventional flow sheet will hold up. Why is this important? Because a simple flow sheet is easier to deliver. And of course, it's much, much, much cheaper. There's very little technical risk in this project because the key step, the beneficiation step, if you will, is flotation. Now, that is a physical process. It's a physical separation process that takes you away from a lot of the downstream processing that is involved in other minerals. So flotation is used in things like zinc and copper, standard equipment, standard processing, very, very well known. When you get into hydrometallurgy or pyrometallurgy, you're applying heat or acid or pressure to cause the rocks to separate so that you can get to the commodities that you want. Now, that's expensive, it's messy, takes a lot of test work, and so on and so forth. This, being a physical separation process, is simple, and it's well known, and it can produce repeatable outcomes with very high confidence, and it's fast to deliver. And so again, I just really want to emphasize why this is different. And this goes to how we can synchronize the two projects as well. It's important to say as well, because I did see a little bit of this online, that there is really no case for direct shipping ore. Direct shipping ore would be simply digging the rocks up and sending it off to someone to do this. But this is so simple. And you would have to shipping a lot of the rocks. So you'd have more volume, you'd have more OpEx as well. And things would have to be customized at that end. So it's much more economic to do this on site. And Australia is very well qualified at this sort of flow sheet. And in fact, one of the key advantages we've got as a company at Tivan is that the whole company has been built out off cycle with everyone else. Now, people should be aware, obviously, that there's a big cyclical correction that's underway in critical minerals and other parts of the mining sector. In the past month alone, we've seen nickel mines shut. We've seen upturns in terms of what people expected to happen at different companies in lithium, in rare earths. So we're in a really significant part of a cyclical correction. I think we are now near the lows because it is characterized by people shuttering mines. That's going to free up a lot of the equipment that we need, and it's going to bring down costs, and it's going to free up capability and availability of contractors as well. So as simple as this is, the time ahead that we've got to execute this is also opportune. It's perfect because we're off cycle. Tivan did not participate in the euphoria that characterized, particularly 2021-22. That was TNG being run into the grounds because there was this change of control and we're operating out of sync with everyone else. If we can move through these stage gates quickly and start building 2025-26, we'll have this fantastic cyclical opportunity to deliver on this very simple flow sheet with gear potentially from other sites, including sites nearby. That's how basic this is. So there's no case for direct shipping ore. Downstream as well, there's no case for us to try to push on to LiPF6, for example, to try to build the next intermediate step, because we're laser focused here on getting to revenue and getting to profits. Okay, so the sweet spot is to run through this flow sheet and then ship the final product out from Wyndham, 100 Ks away. It's very, very straightforward. It'll be very fast, and we're very confident this can be delivered. Now, to the big picture, we've been working closely with a company called Benchmark Mineral Intelligence for the past couple of weeks. Benchmark is one of the major market intelligence providers in the world in commodities, and they've done a fantastic job over the past 10 years carving out a name for themselves, particularly in the energy transition and particularly in lithium ion value chain. They've got the best market intelligence, they've got the best data, they've got the best analysts. Now, just today, they announced that they've launched a Fluorine platform globally. Very important announcement for them, but it shows the importance they're ascribing to this sector. Now, they've kindly permitted us to present just two charts from this product suite, which they're now running around the world, telling everyone about. But again, think of their subscribers, largest offtake partners in the world, governments, hedge funds, so on and so forth. So what you're seeing here is quite privileged information, but it gives you that transparency. And I think hopefully it helps to explain why we're so confident in moving in this direction. The first point to emphasize is that Fluorine, and I said this at the top, it's a big market, $3 billion market, US dollars last year. Okay. Now that's actually bigger than vanadium. It's bigger. Vanadium's around 2, depending on how you measure it. But yes, certainly right now at current prices, the Fluorine market is bigger, and it's more developed in terms of the infrastructure, in terms of these sorts of data that we're able to show today, because fluoride's had so many uses in different sectors over the various decades. There's 10, 20, 30 use cases still, and it runs through cement and aluminium and all sorts of things, ceramics and so forth. So it's a very well-developed market. Benchmark is swung in behind it because of this EV use case. And that shows up clearly in the left panel of the chart, where you see the acid grade segment forecast to have demand significantly exceed supply from around 2025. You can see it on the right-hand panel as well, with those yellow bars moving way down to a deficit of some 600,000 tonnes. Now, we can't talk production targets today. That would be going too far in terms of ASX listing rules, but fair to say that we can stage and ramp up this project so that it is partly meeting that supply gap. In other words, we will not be the ones to push the market price down. We'll be able to land this project in between the supply and the demand imbalance. Our expectation is that the price goes higher, and I'll come to that price chart in a moment. But the outlook is extremely constructive. And you're one headline away from a disjuncture as well. If China takes the logical step and starts to curb fluorspar in terms of exports and ability for Western partners to participate in their market, this market will re-rate in terms of its price significantly. So all of that upside is right there. And it's obviously notable that despite the fact that other critical minerals prices have fallen very, very significantly, that the prices for acid-grade fluorspar have held up and made new historical highs. And it's the market seeing that supply-demand imbalance ahead and not seeing projects come on stream which are able to address it. This is our opportunity, and this is why we want to go for it right now. This is the China chart from Benchmark. Again, this is really, really high quality analysis that's been built up from mines and from companies. So really bootstrap their data up to strong conclusions. And what you'll see here is that China currently represents around 2/3 of both production and consumption of fluorspar. Now, you have to look at this chart quite carefully to interpret it, but I would encourage you to spend a few minutes on it. What you see on the right-hand panel are their forecasts. If China continues to consume fluorspar as they are across their industrial complex, and especially in their huge EV battery chain, China will deplete its entire reserves by 2030. That's the 19% in the right panel going to zero. Now, China cannot afford to do that geopolitically. So obviously they're working with Mongolia to bring extra fluorspar in. But if they start depleting those reserves or even tapering the depletion of those reserves, that will impart upward pressure on the price. The largest and highest quality fluorspar resource in the world is in Mexico. The fluorspar at Speewah is not the best resource in the world. The vanadium is 100%. The best fluorspar resource in the world by grade, size, proximity is in Mexico. It's an incredible, incredible resource. San Luis Potosí, for those that want to look it up. That is the feedstock for the US. That is the feedstock for Tesla, for example. And they've brought on large downstream facilities for EV batteries in places like Louisiana over the past couple of years using public money. So Mexico effectively supplies the US. South Africa effectively supplies Europe. Japan and Korea are scouring for this, so is India. And the real move and shake over the next decade is what's China going to do? Would they really cede their leadership of the EV battery sector? I don't think so. So the most likely they will taper that. That will cause structural scarcity in this market. Again, providing an opportunity for Tivan to supply that market at most likely increasing prices. So very important and a very clear demarcation between the outlook for this market and what I've said in lithium, for example. China's response with lithium to high prices was to bring on lepidolite, which is a low-grade, messy, environmentally noxious form of lithium. But they've done that. They've flooded the market. Up to 10-20% of lithium supply is from that source. And we've seen the reaction. China cannot do that when it comes to fluorspar. It's a fundamentally different supply-demand outlook. Very important to understand, underpins our conviction in forging ahead. And this is the price chart. 2 points to emphasize here. When the scoping study was done in 2018, and it brought back profoundly commercial statistics, that was done with a scoping with the Australian dollar price of fluorspar significantly lower, as we can see on the vertical line. Now, there are two components to the price appreciation since. The first is that the US dollar benchmark price has gone up, and the second is that the Australian dollar has fallen. And you can see the impact of that. And again, I urge you to contrast this price chart to other sectors. It's quite compelling. So this underpins our conviction in being able to present a PFS to market based at or around current market pricing that will be compelling in terms of the project economics. Timing is important. It is important. And it's this opportunity that we believe is unique for us in Australia, and the opportunity to go ahead. In terms of timelines, this is us sliding in the fluorite PFS, again, building on the scoping. We'll be announcing EPC, EPCM shortly. The interview process has already been running for a while now. Again, this is building on the networks that we now have at the company, courtesy of all of the interviews and networking that we did last year on the vanadium. I want to emphasize here that there's no change to what we're doing on the vanadium pre-feasibility study and the broader exploration of mine infrastructure at Speewah. This is an addition. This is complementary. Everything in blue is new. Everything else is unchanged. Where does this leave Tivan as we look into 2024? I presented this chart at the top of the year on Twitter. I know a lot of people are following me there, and that it ends up on online platforms. We are in different points of the development cycle at this company for the three main projects, which we consider to be the flagships. The vanadium Speewah project is centrally important. This is the long-run vision of the company, all the work we're doing downstream, the opportunity that we have to build big green batteries in Australia based on sovereign capabilities, short supply chains to Darwin, and so on and so forth. You'll hear a lot from us on vanadium this year, especially in the territory. The work that we're doing there is very, very important. It'll be more public as the year goes on, and we'll be doing much more scoping and facilitation around that downstream in combination with all of the test work and engineering that we have ahead with vanadium. The fluorite project is much further advanced. It's coming out of what's referred to as the orphan period more rapidly because we have the scoping study to build upon, and because, again, it's simpler. And then we have Sandover, and we won't speak about Sandover today, but we do hope to have drills in the ground with the CLC support as early as April at prospects which are firming up, for gold, for copper and for lithium. And we're getting more assay results back each day, and we're excited about that. So any or all of these are able to re-rate the company along the classic Lassonde curve on project development. The best time to buy into the equity of a junior mining company is when you're in these troughs, ahead of a discovery or pulling out of the orphan phase as you look to institutionalize the support for the projects. Now, a lot of projects don't make it up that curve because they're not viable. And that was the journey at Mount Peak. And that was a long, difficult journey. And I'm sympathetic, as always, to people that were on that journey. We believe both the fluorite and vanadium projects at Speewah are viable. We can build them out in a complementary fashion, leveraging the synergies between the two. And this is really, really important. So the year ahead, we now have three major catalysts, I would argue, and that's a really differentiated position for Tivan versus other companies in the sector. And here, now the timelines, again, this may shock people, but this is where we are on our Gantt chart. We believe that we can deliver a PFS mid-year, and then a 1 year or so run to a DFS. DFS will be involving test work, some engineering, but the engineering is really straightforward. So we do not have to go to FEED. After the DFS, if it's robust, it's 2025 now, we'll be straight into FID, straight into commissioning, straight into long lead items, straight into early works. And we believe, based upon all of the other facilitation around environmental improvements, where we are with TOs, that we're on track to do first shipments out of Wyndham, end of 2026. Not less than, actually less than 4 years since the transition. That would be. Mining projects in this country take 10 to 15 years. From a change of control to project delivery within 4 years is my aim. I hope to sit on top of that lookout with shareholders of Tivan, Five Rivers. We've been there a lot. It's a spectacular place, and watch that ship go out of the port of Wyndham to product markets. We think that's achievable. That's the vision we have here. If we achieve that, this will light up Tivan as one of the few companies in this country that's delivered a critical minerals project of real significance, and again, act as a bootloader for the vanadium project, which we will continue to build out in parallel. It's fast, it's achievable because it's simple, and the timing is right, both in terms of market conditions and the government tailwinds swinging behind fluorine in terms of its recognition on the critical minerals list. Okay, that's essentially it. Right, 40 minutes in. I'm going to pull through the questions that we received online in the last 24 hours. We've received another 3 or 4 just in the past 30 minutes. I understand since the slide deck hit the ASX. So I'll wrap those up and we should be able to wrap this session up comfortably within the hour as well. Hopefully people who have written in will see their question. Again, just ensuring there's that integrity in comms between shareholders and management. We're open to any question anytime. We receive a lot and we've collated these here today. So rough approximate cost to get to production. Very fair question, a question that I can't fulsomely answer until we get PFS. Again, ASX guidelines preclude that sort of thing. And what I can say, just to give people the order of magnitude here, I can share that with the scoping study that was done in 2018, the CapEx on that was $65 million. 65. Now, plus or minus 35% gets you to $85, $90 million. That's an order of magnitude. Now, we believe it's going to be significantly higher than that, just given inflation, COVID, and the impacts that's had on supply chains. But not dramatically, not orders of magnitude. It's a very small project overall. And again, it comes back to the simplicity of that flow sheet. So even with the CapEx higher than that, shall we say, there are offsetting factors to support the very profoundly strong economics that was shown to us in that scoping study. There are 2 main ones. The first, the commodity prices are higher. In 2018, they assumed optimistic commodity prices, I think, in Australian dollar terms. Well, we're higher than that again. We're higher than that again. And it may well go much higher than where we are when the PFS is delivered. So that commodity price is crucial. When you pull together financial models, the number one sensitivity is the commodity price, always. So here we are above the optimistic, shall we say, commodity price that was assumed in 2018. Capital costs will be higher than the number I just mentioned, but not dramatically higher. And also conditioned by the fact that we're off cycle, where capital equipment will be available, potentially including from secondary sources, secondhand sources, mine sites. We will be able to scale mine sites and take crushers, for example. There'll be lots of equipment which is available to us at cost price. So, it's a very small project in terms of capital intensity. Commodity prices are higher and the resource, we believe, will be redefined, adding project life. So the ability for us to pull together a robust, exciting, special PFS on this, landed in June, July, is extremely high. The starting point is extremely constructive. Timelines I've spoken to already. Revenue or profits depend entirely upon the commodity prices and all the rest of that. But it shapes as a very important means for the company to generate not just revenue, but significant profits at high margin. It's a really, really special opportunity. And so as minimal viable projects go to commence, this is as good as it gets. And we're really, really excited to present this over the next 2 quarters. Why wasn't Tivan included on the federal government's recent Australian Critical Minerals Prospectus? I addressed this on Twitter. There was a big prospectus that was launched by Austrade about a week ago, I believe. 53 projects, Tivan's not there. Fair question. We're not there. And I did talk to Austrade about this. And I consciously said, please take Mount Peak out of this prospectus because the board does not believe Mount Peak is a viable project. We've said that repeatedly. Now, when it comes to Speewah, we've got 2 critical minerals. We've got 2 projects underway. However, they are both before the pre-feasibility study stage. This is what we're going to deliver this year, June, July, and again, end of Q3. That's our targets for this year. At that point, what happens is you're converting mineral resources, which are rocks in the ground, to ore reserves. This is the economically feasible part of the resource. You're showing to a public audience that this is capable of being mined on an economic basis. Once you're at PFS, you're eligible for this list. So this time next year, Tivan will take pride of place in the prospectus with Speewah. with two separate resources, two separate critical minerals, both best in class. We're a year away from that, but that explains why we weren't there this year. It was entirely appropriate for us to pull down Mount Peak out of that, but we will be there, pride of place next year. DSO, I've mentioned that above, vastly inferior outcome in terms of project economics. There'd be further OPEX on the volumes, and you'd lose a lot of the revenue. Much better to go for the acid grade product spec, sell into a very, very well-developed market to the demand impulse that is strongly there. So that's relatively straightforward. Has the addition of fluorite to the critical minerals list improved the possibility of a grant from the federal government? We mentioned this at the AGM. The federal government, we do not anticipate, is going to be providing grants to the critical minerals sector beyond very specific research and development type grants that were characterized by the CMO over the past couple of years. What we do now have, because fluorite's on the critical mineral list, is the opportunity to bring our very extensive discussions and negotiations along into this project. We couldn't do this before. It opens up eligibility of fluorite to the critical minerals facility, which is administered by EFA, Export Finance Australia, and which goes to cabinet sign-off on a project-by-project basis. This is the big $4 billion fund. We are now eligible for that on fluorite. Similarly with NAIF, our friends at NAIF, and we've had extensive discussions with them. We're briefing them on this as well. Now, we fall into NAIF's mandate because we're in Northern Australia, because we've got such a progressive traditional owner engagement. But the fact that this is a small project with some infrastructure requirements and it's a critical mineral, of course, that helps. And so it's that recognition which opens up international financing opportunities, government facilitation. There's all sorts of things that will support this project now that it's recognized as a critical mineral. And it gives me, in particular, the ability to make the case that I'm making today. You know, if we'd led with this last year, it wouldn't have worked. Without that legitimizing step, I think people would be like, what's this? Why is this? It's been recognized now as a critical mineral. The onus is on us to explain why it's important. We're starting today. There's a journey ahead. The government's ahead of us on this. That catalyzing event was critically important. So no grants, but loans, facilitation, project finance on those expedited timeframes, relatively small amounts of money is all that's required. This is absolutely tailor-made. And I can say one other thing here, I think, which is that Minister King, the resource minister of the country, has come under some pressure because nickel in particular wasn't included on the critical mineral list. The two lists were segmented and a new list was created, which is called the strategic minerals list. Now, nickel has fallen for various reasons, which are nothing to do with its status on a list. It's a very big market, and obviously the Indonesian supply has structurally changed that market. But fair to say, Minister King's office was delighted to find that the inclusion of fluorite on this list has provoked a new project to come on stream so rapidly. Delighted. So Canberra's thrilled by this. It's exactly the sort of signal they were sending. We've picked it up. We're running with the ball, and we had this fantastic, unique opportunity. Do you see anything unusual in day-to-day trading of shares, et cetera, et cetera, et cetera? Let me make a few comments here. The first is that we are not monitoring the share price day to day. We sometimes get questions that come through about different bits of the price action. I don't see it as our job or responsibility to look at the market infrastructure in a micro way to track given shareholders. We're just not interested. We believe in free markets here. If and when Tivan develops, the last thing you'll hear from me, for example, is someone being critical of someone short selling Tivan stock and so on and so forth. I've worked in high finance for 20 years. I trust financial markets by and large to find the right price for any form of financial instrument. So we're not sitting here trying to micromanage. We'll provide feedback. Anyone that writes, and they will know, asking these sorts of questions to our engagement box will just get a polite, we don't provide commentary on the day-to-day, and we don't. The only thing I would say in terms of unusual price action occurred in December. Directly after the small capital raise we did in December, there was a downdraft, and it was associated, ironically, with the share trading scandal, which took the Chief Minister down in the Northern Territory. That same day, the Chief Minister stepped down for owning shares in South 32. There was a directive across anti-politics, anti-bureaucracy from the Anti-Corruption Commissioner. And it basically said, if you own shares in a company where that you may have a conflict of interest, you should sell those shares, or you have to disclose them, which would have been uncomfortable for some people in the territory. So I know, and we can see from custodial reports, that there was a raft of selling in December, and you can see the volumes picking up in December. And a lot of the sales came out of the Northern Territory, which is ironic because we had a very strong following up there, evidently across different parts of government. So to me, that's the only unusual feature that I'm prepared to narrate. Into January, I would say that the sector has been under really significant pressure. If you look at the bellwethers in the critical mineral sector, a lot of them are down on hard news as well. I think we are approaching some form of cyclical bottom because you are seeing a lot of these reactions now across boardrooms in Australia. Added to that, you're seeing the interest rate cycle turn on a global basis. That is to say, the Fed is going to be easing. I expect the RBA to follow with a lag as well, inducing the liquidity that will support commodity prices. In terms of perhaps the reaction, if you want a real-time comment to the news flow this week, this big announcement, I would actually say that that's also an indicator of market bottoming, cyclical depths, and this is just me, I guess, leveraging off the long history that I have trading financial markets. When you're in these euphoric phases in markets, you'll see all sorts of irrational price action. Bad news will not matter. Stocks will go higher and good news will be inflated. People will chase things independent of valuation. They'll lose all sense. You'll see greed and you'll see other sorts of human emotions at the highs. I think for this announcement in particular, this is the most bullish announcement, certainly that I've made at Tivan since the change of control. This fundamentally re-rates the company, an accelerated timeframe for development, a clear path to early stage revenue, a highly profitable, simple project. This is as bullish as it gets. And yet there was confusion on the day. And we have to take some accountability for that because I don't think people, as much as I did try to put some foam on the runway on Twitter, understand fluorite. And they saw our fantastic narrative on vanadium and they were somewhat confused on the day. But I do think when you announce something which is so fundamentally bullish and you see a reaction which is in the opposite direction, that's an indication that the market is behaving irrationally and symptomatic of broader cyclical lows. So these are the only comments that I would make. My own view is, as I just said, this is the most constructive announcement, the most important announcement in terms of the pathway that we've got ahead that I've made as executive chair. And so I'd really encourage people to dig into it, keep asking those questions. We're here to answer them. So I'll wrap up just with a couple of other questions that we did receive. And very briefly, where will beneficiation be located? Beneficiation in this instance is the flotation. So that's on site. In terms of how stable is the fluorite market, supply and demand, I think I've narrated that already. It's a very well-developed market ecosystem, which is held across a lot of players. And it's in many ways much more mature than other markets of the same size, given its long history. The supply-demand imbalance we've shown very clearly. We've got fantastic data on that. And we can see the evolution quite clearly because you can see the midstream plants on the demand side coming on with a couple of years lead. And you can see how long it takes, even for us, operating at warp speed to bring something to production. So you're able to visualize very clearly. And I would say as well, the price volatility, if you look at that price chart, the price volatility is very low. This is a grinding rally, which potentially has explosive upside if China curbs exports aggressively. It's not seeing those huge swings that characterize other commodities. And that's a tremendously bullish sign in terms of the underlying supply-demand picture, and it gives us a lot of confidence. In terms of, and I'll close with this very good question, fluorite as a standalone project and synchronization with vanadium. And so, we have to walk and chew gum at the same time. And we're very much capable of doing that at Tivan. Fluorite is a standalone project, standalone PFS, standalone facilitation, much lower power requirements, much lower water requirements, much simpler flow sheet. It will move much faster just on that basis, and also because we're moving on the building on top of the scoping study. The vanadium is more complex. We have to go through FEED, front-end engineering and design, by virtue of the salt roast. The Tivan pilot plant is being worked on in terms of labs and all the test work at CSIRO. It is a much more complicated project. We have said publicly timelines, long-term timelines on the vanadium. This is in the slide deck, that FID at the soonest is late 2026. That's our target for vanadium, FID. 2 years to build from there, 27, 28. Revenue on the vanadium, 2029. That's the public position of the company. Now look at this. Look at this. Fluorite, first shipment, end 2026. Can we make that any clearer? This is 2 years faster, probably more, 2 to 2.5 years faster. That is a long time. That is a hell of a long time. And I want this company at revenue, and I'll do whatever it takes to get this company to revenue. Revenue would be the most transformative thing, the most bullish thing. And we've put this proposition on the table, this project, we're getting accelerated, and we can work on the vanadium at the same time in synchronicity, because there's so much common infrastructure. We can build the road in, for example. We can build our tents. We can have our workforce. All of the facilitation that we would have from the Fluorite project would naturally lower the costs on the vanadium project as well, on top of social license, on top of revenue flowing, not just to the company, to traditional owners and so on and so forth. So all those opportunities open up, which is why this is such a compelling and complementary opportunity. The board has looked at this closely. Our technical advisory group has been heavily involved, our project team. Everyone at Tivan is fully on board, incredibly excited that we have this opportunity, and it's very much full steam ahead. So I hope with that, shareholders now get the buzz, get the excitement. I hope as well that I've been able to convey the technical aspects, the coordination, the facilitation, the rationale, the catalysts. But again, I just want to come back to those two key words to close out today: compelling and complementary. And I'll leave it here today, but you'll be hearing much more from me on fluorite over the next couple of months and beyond. And I just urge you again not to see that as us in any way diminishing the long-term opportunity that we have on vanadium. We're super excited about both things, and we'll be forging ahead in rapid time. Thank you.